Hi, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin and the crypto markets. Welcome in, everybody. I hope you had a good holiday weekend. We are back to the charts. We are seeing some action on Bitcoin, on the crypto market, on the traditional markets, and we broke down the channel last Thursday, guys. We talked about this ascending channel being a very similar fractal to our higher time frame ascending channel that we're seeing from 60K up to 83K. That ascending channel that was in there, we were looking for something very, very similar throughout the entire week, throughout the entire 2 weeks. This ascending channel hitting the top of the channel with a confluence of resistance and then seeing that big dump to the downside. And you can see now that we are hit the top of the channel. Now, over the weekend, though, this push up that we saw over the weekend, I'll talk about here, because this looks like an even smaller fractalized version of this in some ways. Like, it's just the same repeating pattern that keeps happening. But after hitting the top of the channel at 67,300-ish, we rejected, and on Thursday, we were losing that channel with a high amount of volume. And this is what I want to talk about. But first, I want to welcome everybody in. R Pink, thank you so much for being here, man. Much love to you. Thank you for hitting the like button on your way in. Thank you for modding, and thank you for the great job you do always, R Pink. I appreciate seeing you in here always. Bullish on Parade, what's up, man? Everyone getting bearish. I'm wondering if we're going to get a spike up to grab some liquidity. Yeah, so my overall premise now, guys, is that this range here is going to continue. We're actually going to see this more of a flat range, like a WXY kind of flat range in here. That this is going to, I don't think we're going to come take out the 59Ks right away. Could we? Yes. The problem with that is it's very hard to count an impulse in this move down. And because we can't count an impulse in this move down, now we have to be looking at larger, you know, a 3-wave corrective move in a W. We could be looking right now at a 3-wave corrective move in an X. And then we would have to be looking at a 3-way corrective move in a Y to the upside, where we could grab some liquidity or even grab the highs of the range. So we'll talk about all of that. But yeah, right now, money flow doesn't look the best. You can see we had confirmed bear divs on the move up over the holiday weekend, confirmed bear divs. And what is important here, guys, and I talked about this briefly in yesterday's live stream, yesterday's video, but actually, first, let me welcome everybody. Teal House Coffee and Bakery. What's up? It's good to see you as always. Lil Rick 69. We're doing good here, man. It's good to see you as well. Thank you for being part of the Divine Hood family. Bansbell, Micron rejected at 1,200. Awesome, man. Well, I hope you did get some profit on that. I know you were heavily in that trade there. So I hope you were able to get some profit off that. And it's been an awesome stock to look at. So good job finding that, Bansbell. Dylan Wadia, what's up, man? Let's go. Yeah, boys, it is time to get back to the charts. It is time to catch these trades. No, hello from South Africa. Welcome in. I think that's a South African flag. I'm sorry if it's not. Eric, much love to you. And Dr. Rex, good evening from hot Belgium. Good evening, Dr. Rex. I hope you are staying cool there. But okay, guys, so here's the deal. We were looking at, after on Thursday's dump, we lost the channel with a volume imbalance to the downside. Now, we bounced from a very important support level. If you pull your Fibonacci golden pocket from the lows to the highs, the lows of the channel to the highs of the channel, you can see we came down and we hit that 618. We did have some bull divs forming on the chart as we were coming down to that 618. So you expect at least some sort of reaction bounce there. Now, I admit that over the weekend, going into Thursday and Friday's live stream and Friday's video, I was looking for this to, you know, some 1-2s in here. This being our third wave, I was looking for 4s and 5s and for this to continue down. But we didn't. We were able to hold the golden pocket support, and we were able to kind of grind up over the weekend, and we grinded up to a very important level. Well, first off, you can see we barely front ran the pitchfork, and we bounced before hitting the bottom of the pitchfork. Let me hide this for a second. And then after losing, after kind of hitting into our channel, our pitchfork band of, you know, resistance, this area here, we had some other confluence in here as well. We rejected, and then we ended up losing it. And then this weekend was kind of the back test, but we did barely front run the back test of the lower band of the pitchfork, the lower limit of that lower band. But the pitchfork overall is still kind of giving us these guidance zones where we could be looking for resistance. But the important thing is we lost our ascending channel, right? We lost our ascending channel starting last Thursday. We know the holiday was on Friday with Juneteenth. So from Thursday, from this low on Thursday, all of this is weakened price action leading up to the pump yesterday. This kind of little pump that we saw in here yesterday around market open. Well, when you see this kind of grindy corrective move to the upside over the weekend, it can be a bit of a bull trap, guys. And if we look at our volume profile, so first off, why did we reject where we rejected? Well, once again, that important psychological level, the Fibonacci golden pocket, that golden ratio that's psychologically ingrained into our minds. So if we go from the highs to the lows we created on Thursday, you can see we came right up to that golden pocket, which was also the back test of our channel that we lost. So when you lose a channel like this, yes, you might bounce from a local support. In this case, it was the macro golden pocket, pulled from the lows of the channel to the highs of the channel. We bounce and we get a grindy corrective move up over the weekend, three-wave move up overall to back test that area, and we reject with a harsh rejection from that area. Now, as we were coming up there yesterday morning, before we ended up getting into that area, I told you guys we were about in this area. I told you guys I will be looking for a short from that golden pocket. And I did end up taking a small position on a short from that golden pocket. And I am still partially in that trade. I have over 50% of that trade closed out. But we were talking also in terms of the volume profile. So let me go ahead and turn on that volume profile. We've been in for about 3 or 4 weeks now. It's our local range. You can see this was our local range. And what ended up happening on Thursday, look at what happened on Thursday, is we were able to break back inside that range. Really, it was Wednesday we broke back inside and we back tested, couldn't. So we broke down and we broke down through the POC, but we broke down with a high amount and a volume imbalance at the time, which was super important. So that reestablished price action back within our volume profile, meaning that this was most likely a failed auction breakout of the volume profile, and that there was a very, very high chance, because we had broken the POC on Thursday as well, there was a very, very high chance that we could rotate down to the value area low of the volume profile. You can also see, if we look at this volume profile, now the value area has changed a bit. What we rejected, POC, not POC, golden pocket, and the backtest of the channel, we fell back inside of our volume profile. And if I take this volume profile and we pull it back just a little bit here, yeah, I guess we were trying to break out of it over the weekend. I showed you guys this in yesterday's video. One break, one try, 2 tries. We broke above it Monday just to hit into that resistance, and then we rejected. Now, very similar to how we created this parallel channel. Let me hide this real quick. Very similar how we created this parallel channel based off of making a low, having a higher low at the golden pocket, and that was our golden pocket. If you pull a Fibonacci from the lows to the highs, you can see that was our golden pocket coming in there. And then we have our original highs. So anytime you make a higher low at a golden pocket, you can pull a channel, and that channel is very highly respected. So we had this channel on the chart looking for the top of this channel a week before it happened as a potential resistance and rejection zone. Now, we broke this channel down, but we rejected yesterday from our golden pocket here, our lower high golden pocket. So what we can do now is we can take a parallel channel from the highs of the move to our lower high golden pocket, and then we could put it on our low that we made on Thursday. And you can see we have another nicely respected channel here. Bounces support, then flipped into resistance here. Broke above it, flipped it to support on very low time frames here. A little bit of a deviation here, but pretty much this channel now is now confirming the potential trend support zones for a bearish market structure, right? Because remember, when we were in this ascending channel, we were in a bullish market structure, making higher highs and higher lows in here. Now that we broke down, and really it's best to look on the 4-hour chart for this, this was a major higher low that we wanted to maintain above in order to maintain bullish market structure. We wanted to maintain, if we broke that low, that means we would be breaking market structure bearishly on the 4-hour time frame. Meaning that if you break market structure bearishly, remember, market structure is king. if you have that bearish market structure break on the 4-hour time frame, now it is more likely to make a lower high before putting in a lower low. And where do we look for those lower highs to come in? The most common area is the psychological golden pocket retracement. So broke market structure bearishly, broke the channel down. You can also see that that low was also at the bottom of the channel, so you really didn't want to take out that low. We took it out with a volume imbalance, meaning that it was more likely that we were going to see a corrective grindy move up to our golden pocket before continuing to make new lows below last Thursday's low. Now, we've done that. We can pull the new channel, right? We can kind of, this channel now, I'm leaving it on the chart for now, but it's pretty much been kind of used up, right? We've had our analysis from it. We saw the rejection from here. We saw the bearish backtest from here. So that channel is still somewhat relevant, but we now have a new channel that we can pull that is far more relevant, and that is this descending channel here. So from the high to the lower high to the low on Thursday. And you can see when I did make yesterday's video, I pointed out the channel midline was a potential bouncing area with some daily levels and a naked daily point of control. But I also said we have to be careful. You see these two daily levels smashed in between this anchored VWAP. We also had the naked daily point of control smashed in there. But most importantly to me, if you watched yesterday's video, I was talking about the weekend lows. We had a Saturday low, and then we had a Sunday low right above that. And together they were so close right next to that anchored VWAP. We wanted to see, and it was our channel midline area, we wanted to see the SFP of those lows for a potential scalp long opportunity to take up to a lower high before making another lower low. We did not see that. Now, I was asleep when that happened. My alerts did go off. I did not bother to get up to, well, I looked for a second and I saw we weren't seeing the SFP, so I just went right back to bed. But yeah, we did not see that SFP. And remember, guys, no confirmed SFP equals no trade. We dumped straight through it. Now, we had also a couple other things of support, other levels of support. We had the golden pocket that was above it just a little bit, above those daily levels just a little bit. And if we look at our local range POC, it was just above the golden pocket just by a little bit. And I said I really wasn't interested in these levels. I was more interested in the naked daily point of control and the liquidity below. Anyways, none of that really matters. We dumped straight through it, and we are continuing to break down now. And what we can analyze here is the local breakdown from yesterday's high, from yesterday morning's high. So let's go ahead and move on to the 1-hour chart. And on the 1-hour chart, I can see right away that we do have what looks like an impulsive move to the downside from yesterday's high. Actually, I will go to the 30-minute chart so we can see this even a little bit better. But you can see we kind of get that initial big move to the downside followed by a small 3-wave corrective move up. So we could say this is a wave 1, this is a wave 2. We got our big breakdown on an increase in volume, which could be our wave 3. You can see how volume was increasing as we were, it was increasing more than volume was decreasing during the wave 1, volume increasing during the wave 3. And right now we could be in a 4th wave corrective move before ultimately seeing some bit of a move to the downside, right? Another 5-wave move to the downside to finish the impulse from yesterday morning. And then if that is the case, if we are looking for this to continue down locally to finish the impulse from yesterday morning, then we now have to zoom out on the higher time frames and say, okay, well, what is this now? Because it is very hard to count an impulse in this move down. It looks more like a double zigzag corrective structure. And it is very hard. This is also very choppy and overlappy. So a bunch of corrective moves, right? A bunch of complex corrective moves. So what I would now have to go with as far as Elliott waves go is we're in a larger WXY complex correction from the lows at 59K. So then I would have to say, okay, that means that there's a chance that we could not take out the low yet at 59K. We could bounce before and then see another move to the upside to take out Monday's high or to take out some liquidity or look at the range, right? So I'm now looking at this being a W, a 3-wave move, right? A zigzag 3-wave move and a W. Right now, we're in the potential X wave, zigzag 3-wave move in an X before seeing another zigzag 3-wave move in a Y, and looking more at this as a larger flat correction, a complex flat correction in here that could take another week, 2 weeks to play out. So if that's the case, then I will be looking for some long positions at the nice confluences of support. All right, we have our box that's already laid out here, right? We have very important liquidity from some Wednesday lows. We have the bottom of our channel, which we know these channels have been being respected. The highs and lows of the channels have been being respected. If we turn on our volume profile, now our value area high, or excuse me, our value area low has increased just a little bit. But if we pull this back just to, like Thursday's dump, you can see that the value area low was at the base of this, or at the start of this green box of support. Yes, it has risen up a little bit, and we'll talk about that in just a second as well, because I am potentially interested in taking along from that zone based off of this structure. But we still have some important levels in there. We still have the, let's see, what was it? It was a naked daily point of control at 70.6K, and really the value area low is very close by. You got your channel. So looking for this support, and then it was also your macro 786 Fibonacci. If we look at pulling a gold a Fibonacci retracement from the lows at 59 to the highs at 67.3, we turn on that 786, and you can see that 786 is in there in that zone as well. So a lot of support coming in that zone. Okay, now, if we're looking at seeing a 3-wave corrective move here, we want to look at our trend-based Fibonacci extinction, right? If this is our X wave, a 3-wave move in our X wave, then we want to look at our trend-based Fibonacci extinction. So we can take our trend-based Fibonacci extinction tool from the highs of 67.3 to the lows that we saw on Thursday around 62.2, up to our highs that we made yesterday. Well, what do you guys see? We have more confluence of our 1-to-1 target being just below our liquidity right into that naked daily point of control. So more confluence for a potential support zone where we could see a bounce. And then now if we zoom in even further, let's zoom into the 15-minute chart. If we're looking at this impulsive structure from yesterday's high coming in, we're looking at a 1, 2, 3, 4, 5. We can pull our wave 5 targets based off of this corrective structure that we've seen this morning. And we can go from the lows to the highs. We're going to put on our wave 5 targets. Now, this is where it gets interesting around the value area low, because you can see around that value area low is our 1.618 trend-based Fibonacci extinction target. Also, we have the daily level that's in that zone, right? Between the 1.236 and the 1-to-1. So now this zone to me is not as important as the zone below, but I am going to be paying attention to this little zone throughout today for a potential long position. Obviously, the bigger green box below is much better support, but there is a chance that we could bounce from this area and see a bigger move to the upside. So we're going to have to pay attention to this area. This area is between really, I'm going to say 61,450-ish to like 61,220-ish is a nice zone. And that is if we don't break this another high locally. If we break up from another high locally, then we would have to repull this 5th wave target move. But to me, it does look like this is all corrective that we've been seeing today. We've also rejected twice from the VWAP. I mean, this was a very close front run, but pretty much a rejection from VWAP, and then again, a rejection from VWAP. So now that we're rejecting from VWAP, that acts as your intraday volume-based resistance. It is our intraday volume-based resistance. We expect to take out the lows. And if we look at the lows throughout the day, you can see that they're pretty much equal lows on the Coinbase chart. Not exactly, but they're pretty much equal lows. So we have twice the liquidity, by what, $9 on the chart? Meaning to me, twice the liquidity to be stopped out. And also, we could be looking at this as some sort of flat A, B, C flat. Now we're looking at a 1, 2, and then this is probably part of your third wave. You're building a bunch of 1, 2s, and then you're going to see that 3, and then some 4, 5s, 4, 5s. That's your internal third wave. Then you would expect to see a bigger fourth wave, and then maybe that fifth wave come in. So this would be 1, 2, 3, 4, 5. Meaning we could still get a bounce from here to make a lower high and then a lower low. We're going to have to pay attention to that very closely, and that's going to be scalping stuff, scalping opportunity stuff. But if you are going to take a long from this box, I would be very wary to take profit very quickly, protect your position very quickly, and then you could leave some open to run. But I think that we might see a small bounce from here just to come up to like your 0.5 Fibonacci before seeing that last move down to take liquidity. Okay, let me check the chat here. Welcome in, everybody. I hope you all had a good weekend. Mr. Rekachun, much love to you, man. Is this the Divine OnlyFans podcast? It is the Divine Hood OnlyFans podcast, man. Webcam coming and all soon. Much love to you, Mr. Rekachun. It's good to see you. Yeshwant, love you. Thank you so much for joining in from India. It's good to see you as always. Stefan Dinges, what's up, man? Time Attack, much love to you. Thank you for being here. Thank you for modding. And thank you for smashing the like button. Yes, guys, please do smash the like button. If you do get any sort of insight into the market from this live stream, please do smash the like button for me. Mamba TYZ, TZY Crypto, yes, I am looking for that SFP as well. To me, the low on Coinbase is at 60.7K, not 60.5K, but you can see 60.708, and I don't know why I have that on the chart twice. Let me go ahead and I'll delete that one, and then we'll see if this one will re-add. There we go. Yeah, so pretty much I'm looking for that low at 60.7K to be taken. And remember, we have that naked daily point of control. Now, this naked daily point of control, I want to talk to you guys about this naked daily point of control at 60.6 because it has actually been there since way back here in this triangle at the very first week of June. Let me hide our volume profile to clean up the chart. And we will look at that naked daily point of control. So if we come into our naked daily points of control and we turn that on, you can see that it was front run even back here, that Wednesday low on June 9th. It was front run then. So now we have a liquidity of a front run of that naked daily volume support right into that. And then, of course, your one-to-one trend-based Fibonacci extinction is there. And honestly, that one-to-one trend-based Fibonacci extinction is a very important to look at. Just like when we often see these three-wave zigzag moves reject between the one-to-one and the 1.236. So on the move up that we saw from 59K up to 67, if we look at that trend-based Fibonacci extinction, it was more the 1.236. But you can see between the 1-to-1 and the 1.236, you get your big rejection, right? You get it in that zone between the 1-to-1 and the 1.236. And we also had some other resistances up in this area. So knowing that the 1-to-1 is aligning with a lot of other confluence of support, I'm really paying attention to this zone. And specifically the bottom of the channel. Guys, this rejected from the top of the channel so perfectly. This channel, by the way, this wasn't hindsight analysis. We had this channel on the chart, this ascending channel. We had this on the chart the whole week leading up to here. If you go watch the Monday, I think we rejected on a Monday, June 15th. But if you look at the Monday a week prior, I had this as my thumbnail, right? Looking for a bounce from the golden pocket to move up towards the top of the channel. And so this wasn't hindsight analysis that we could make it up to the top of the channel in a zigzag correction and then dump. So now I'm looking ahead of time, right? This channel, this descending channel was really just kind of created and formed yesterday with the rejection from the lower high golden pocket. But now that we rejected that lower high golden pocket, we can throw the downtrend channel on. And it's because we broke market structure bearishly. Remember, by taking out this low on the 4-hour time frame, we broke market structure bearishly. So now we can make our bearish channel. And we can look for support around that bearish channel the bottom of the channel, which also happens to be a 786 Fibonacci, liquidity, naked dailies, one-to-one trend-based fib support. Your value area low is very close by. A lot going on there. Matthew, VWOS, what's up, man? Welcome in. When you come in first, like, please, 85 viewers, 21 likes. Yeah, guys, please do. And thank you, Stefan, for the support. Please do like the video, guys. If you just enjoy the live streams, or if you get any sort of insight or learnings from this live stream, please do like the video. I am trying to grow the community. I'm trying to, you know, what my vision is to build a community in Telegram and even just in these live streams where we have a bunch of educated traders that are all throwing out ideas from each other. Maybe some of us are volume profile traders, some of us are Elliott wave traders, some of us are a combination of all of it. Some of us use smart money concepts, but what I want to do is build a community of really educated traders with all kind of similar perspectives on the market, but different, where we can all kind of throw ideas out and work together to scrape money away from the market makers, right? Because this is what we're retail traders. We're considered the retail. And what I would like to do is just build that community of people that truly understand the market, and maybe they see it in different views and different perspectives. But if we work together as a team, it's always better to cooperate and work together as a team and truly build that wealth together, like scraping money out and building it together. I really do think that is the way to go. And so, you know, I'm trying to grow the community. I'm trying to get a bunch of people that are hungry, that are willing to learn. And so if you guys are in that with me, please do hit the like button, and let's just keep growing this thing, you know, keep growing, keep scraping money away from the markets and building that wealth. Jose, welcome in. Hello, Divine. How long do you think BTC will take in time to complete the final fifth waves of all the fifth waves remaining? Man, that's a Jose, that's a really, really tough question. But let's zoom out onto the daily chart. And if we look at, you know, we're in, so I get your question, by the way. We're looking for a move down in this fifth wave on the daily time frame to take out your 59K lows. But overall, we're also looking at this finishing a, you know, a potential WX and then a Y correction, right? A move down in a large from the all-time highs, a move down that could end all of this as well. Three-wave move W, three-wave move X. I am starting to not like how long. So let me get to the Binance chart, because my original thesis was that we were seeing an impulse, right? A wave one, wave two, wave 3, 4, and then a fifth wave to the downside. And then we would see that, you know, correction, and then potentially another 5-wave move that either in the ABC, right? That's kind of what my GHK is looking at, where that ABC could bring us down to 39K. That is a very, very valid count on the chart. One thing that I don't like is this move down here doesn't have a clear 5-wave count in it. It's very hard to. Yes, you can kind of force one, but because of that, I had an alternative scenario where I was looking at a WXY correction. So kind of this 3-wave move in a W, a 3-wave move in an X, and then in the Y wave, we were looking for a 3-wave move, like all the way up here, and then this is to finish it. But I don't like how your Y wave is taking so long compared to your W and your X in here. Anyways, that stuff is valid to look at, but what we need to be paying attention to the most is the rejection from 83K, right? This move down here, we're looking for the impulse to complete on that move down there. And even within this move, we can see some 1-2s, you know, a 1, 2, a 3, a 4. I'll zoom in on that so we can get a better look at that. That is pretty much this count that I have on the Coinbase chart, right? And I'll zoom in so we can get a better look on the 4-hour chart. We were looking at all of this chop being a 1, a 2 here, which is a very shallow in time and price, but it does respect the target of the 382. That's where we rejected. We saw our wave 3 to the downside, which that is a 5-wave move, a 1, 2, 3. We had a triangle in here and a 4, and then we had our 5. So we had that. And so overall, we've been looking for this as a 3-wave zigzag move and a 4. By the way, I've had that on the chart for weeks before we even really started the move to the upside. I had that as the biggest possibility. And then now we're looking for this fifth and final impulse to the downside to finish. But I'm starting to rework my thoughts on that a little bit based off of this sideways range that we're seeing here. We could be looking at taking this 4 and bringing it way over, and then taking the 5 and bringing it way over. Because if this is going to be a larger W, X, Y flat correction, that is where your fourth wave would end. And then you would be expecting a new impulse and a fifth wave here, right? So meaning you're not immediately going to take out the 59K lows. You're going to see a larger sideways extended range in here before. And that is something that I am now paying attention to a little bit more, just based off of if our fourth wave was my original thinking as a simple zigzag correction, right? You see the 4 end around here at 67.2. We wanted to see this impulse down that started on Monday continue, Monday of last week, not Monday of this week, continue to push down aggressively, right? You wanted to see these little bits of 1-2s in here, and then you wanted to see it continue to push down. But because we're seeing this bounce here, we have to rework that a little bit. And we also did hit your macro golden pocket, which invalidated this move down as an impulse, right? As a multiple 1-2 impulse. And I described that in Monday's video. So as far as time goes, it's really hard to say. I can say that the 4-year cycle has been respected so far. We know that the 4-year cycle is due in about October, right? October, November. You can kind of give it that 3-month period, September, October, November. These ranges can extend, it's like a week here, a week here, a week here, a week here, week, and it before you know it, it is October. So, I mean, gosh, it's almost towards the end of June already, guys. It's the 23rd of June, and it just feels like this year has flown by so quickly. I remember at the beginning of the year, it's gone by so quick. So time is very hard to answer that question, but I wouldn't be surprised if we do finish our bear market towards the end of summer. The next major low towards the end of summer. Yeah. Now, if we're looking at this, there's another alternative count that we talked about. Let me just go on to the index chart here for this. There's another alternative count that we did talk about here with this move down from $83,000. We were looking at some potentials of seeing a completed 5-wave impulse down here with that extended 5th wave, right? Let's see, 1, 2, 1, 2. You had your 3, 4, 5, 4, and then that big extended 5th wave, a big, huge extended 5th wave, which does happen. Now, if that was the end of an impulse at 59K, then we have to, and let me just get rid of this old TA, then we would pull a Fibonacci retracement from the highs at 82.8 to the lows, and then our minimum target would be to hit that 382 Fibonacci. Let's see, where is it? Strong trend, here we go, 382. Now, we'll put this on log scale because that's close to a 30% dump to the downside. When you put it on log scale, you can see that where did we reject, guys? To the dang dollar from that 382 Fibonacci. So that means that there's a chance that this was an impulse to the downside that's completed. We're seeing a corrective move here to hit that 382. And then we could continue a whole nother impulse down here, an aggressive impulse down here. The only thing that is throwing a wrench into that is that this first move down is very hard to count impulsive because of all the overlap in there. So now we would once again have to go back to that scenario of a larger kind of flat correction in here where we could bounce from your 786 or even like your 886, right? And if we're throwing on that trend-based Fibonacci extinction from the lows to the highs, and we look at the 886, it's at about $60,000. And then we look at our trend-based Fibonacci extinction of your X wave, right? You can see that it is right in that zone. It's a bit tough, guys. It's a bit tough it's more, we have more of zones, right? We have more of zones of liquidity. Of supports, excuse me, not liquidity. But I honestly couldn't give you an honest answer to that, Jose, with any sort of confidence, except as far as the 4-year cycle goes. Does Divine have a tutorial on using NAMI? I'm thinking of getting it on top of Market Cipher. Bullets 3, I don't yet. NAMI is a great tool. So let me just tell you, Bullets, real quick about my ultimate setup on a confirmation, because you guys know I'm a confirmation-based trader. So my ultimate kind of setup that I see on NAMI and Market Cipher together, I think when you use them together, that's when they really both shine, right? Market Cipher has really good kind of smoothed out money flow, which gives you the overall direction trend-wise. But the momentum waves are very slow to confirm the bull divs, and by then you might have pushed up aggressively, right? When NAMI has multiple drives of bull div, I'm trying to find an example of this. Multiple drives of bull div coming down into that 60K low. We didn't see Market Cipher have bull div though. Hold on, let's go to our 4-hour chart. Yeah, I'll have to look for a setup for that, but what we're looking for essentially is for Market Cipher to have like one confirmed drive of bear div. Let's just say that this made a higher high here. So we would have one confirmed of bear divs, and usually your money flow is topping out and starting to curve to the downside. And then NAMI will have multiple drives of bear div, and it will also have money flow bear div. That is what I'm looking for, that ultimate trade setup. Now, when both NAMI and Market Cipher are aligning together like that, I tell you the trade plays out. I haven't done the statistics on it, but it's at least 80% of the time. It's that ultimate trade confirmation setup with both of them. And I've been using Market Cipher a lot longer than I've been using NAMI. I've been using Market Cipher since I think 2018 or something like that. I can tell you that together they work really well. Market Cipher is definitely better for scalpers or for intraday traders because it does have smart adaptive time frame. It confirms the momentum wave bear divs a lot quicker than Market Cipher. You can see even on this push up over the weekend that we had on the 4-hour chart, this push up over the weekend, Market Cipher does not have bear divs, but money flow is overall draining, and you do have, that money flow overall coming out on the chart, and money flow is very powerful on Market Cipher. But between these two highs, right into your golden pocket, you had one drive of bear div confirmed by another drive of bear div here on NAMI with the money flow bear div as well. So NAMI is very, very quick to confirm and very, in my opinion, it's a great tool. Now, speaking of that real quick, guys, while we're on the subject here, I do want to take just a second to shout out the partners of the channel. The main partner of the channel is BYDFI. They are a VPN and KYC free exchange. All you need is an email and a password to sign up. If you do sign up using my affiliate link in the description below, you can get a minimum of 20% discounts on trading fees, and you can actually earn up to 40% discounts if you do deposit some larger amounts into the exchange. They're offering up to $8,100 in extra futures trading bonuses just by the amount of volume you move on the USDT markets, whether that's with Bitcoin or the altcoins. It doesn't have to just be trading Bitcoin, but just by trading on the USDT futures markets, you can earn up to $8,100 extra dollars. And in my opinion, that's a great incentive. If you're already just trading, on the futures markets, longing and shorting using USDT contracts, it's a really great incentive to get some extra money deposited into your account. They're also offering some of the best initial deposit bonuses in the entire industry. For instance, if you deposit $100, they'll give you a 50% deposit bonuses. Most exchanges will only give you $20 if you deposit $100, so it's over double. They're giving you 20% deposit bonuses up to $1,000 deposit, and they're giving you 10% deposit bonuses up to a $20,000 deposit, which is also double what most exchanges do. Most exchanges will give you, if you deposit $10,000, they'll give you a $1,000 futures bonus, but they won't give you, if you deposit $20,000, they won't give you a $2,000 bonus. So if you deposit $20K, guys, you can supercharge your deposit with an extra $2,000. In my opinion, that's also a pretty good incentive. You do have to KYC in order to get these deposit bonuses, but they are available for you. Now, I've also partnered with BYDFI to create that Telegram community. It is a private community, but it is free. And in this Telegram community, I let you guys know when we're setting alerts during all these live streams on the altcoin setups or on Bitcoin in general. If I'm not streaming or I'm not in a video, I will let you guys know in the Telegram as we come to those levels, those alerts, whether I'm going to take a trade or not. Of course, if I'm not sleeping, that is. And also throughout the day, I kind of keep you guys updated on Bitcoin, or if I see a good trade setup on an altcoin, I'll kind of pop in the Telegram and let you guys know about that. So Telegram is in my opinion, pretty awesome to stay up to date on what I'm looking at on the market or potential trades I'm interested in. If you're interested in joining the Telegram, it's free. All you need to do is join BYDFI using my affiliate link in the description, and you have to deposit a minimum deposit of $100 or more. You can deposit more if you want to get some of the bigger bonuses, but a minimum deposit of $100. Once you've done that, you click the Telegram link in the description of this video, and in that Telegram Verify channel, you're going to type in /verify and then your BYDFI user ID, and that'll get you into the Telegram. /verify and your user ID. Okay, I have another non-KYC exchange. It is Blowfin. Blowfin is offering VIP1 for 30 days. If you deposit, hold on here, there we go. If you deposit $5, you can get a $10 voucher, and then they're giving some pretty good initial deposit bonuses. All the way up to if you deposit $10,000, you can get that $1,000 futures bonus. Links in the description if you want to support by using Blowfin as one of your exchanges. And guys, using any of these links is a way to support the channel. You can also just hit the like button, subscribe, and share, all that good stuff. I have 2 KYC exchanges, being MEXC and Bybit. Links are in the description if you want to sign up for either one of those. And then lastly, I have NAMI Trading, which is this momentum and money flow indicator we were just talking about at the bottom of the screen. And for me, I use it for confirmations to enter trades. So Monday morning, before we came up to that golden pocket, I let you guys know that I was looking at that golden pocket as a potential short zone because it was the back test of our channel as well as the golden pocket. And I said, if we come up here, we didn't have the best low time frame confirmations, but that 4-hour bear div and the money flow coming out overall on the 4-hour was enough to at least give me an attempt to try to short that there. And so I did enter the short yesterday from the rejection of that golden pocket. And I'm a confirmation-based trader, so I'm not just going to short as we're coming up to the level. I want to see confirmations, and that's what I use NAMI for, is to enter confirmations to enter and exit trades. Since I've been using NAMI to do that, my profit margins have gone up because it usually gets you into the trades that are more likely to play out, right? You already took out the low. That should already be a win. TP, as soon as you take out that low, move your stop loss to break even. Now you have a risk-free trade. But NAMI is really helpful for me. So if you're interested in purchasing NAMI, I've partnered with them to get you guys 50% off. If you use, click the affiliate link in the description, and when you're checking out on the website, you use discount code DIVINE50, and you can get 50% off that lifetime subscription. So, and just use it in that discount code promotion box as you're checking out. All right, that's enough of that, guys. Let's get back to the charts. And thank you, R Pink, for posting those in the chat. Mark Dutch, much love to you, man. It's good to see you in here. I hope you had a good holiday weekend, Mark, or Father's Day weekend. I don't know if you're a dad or not, but and I know you're traveling a lot, so, but I hope you had a good weekend, man. All right, let me scroll back up to where I was. Where was I here? Grok can give good tutorials on the topic of your choice. Awesome. Well, thank you for letting us know that, Tom. BTC can retest 64K before direction confirmation. Check 4-hour time frame. Well, okay. It can retest 64K. Yeah, that's probably going to be around your golden pocket. Let's check that out. Yeah, it's going to be around your golden pot, your local golden pocket. Well, if we're looking at just this corrective range from Wednesday, June 3rd, you know, this is that range that we've been kind of looking at, that local range. Your golden pocket is going to be right where the back test of your value area high is. But first, what we have to see is a reclaim of the POC, right? Because look at what happened yesterday. We fell through that POC with a volume imbalance candle. So because of that, your POC is now going to act as resistance first. But yes, if we can see a bounce, like actually what I would be looking for, let me go back to the Coinbase chart. What I would be looking for is a back test. I would be looking for a little bit more of a local move to the downside to hit that box of support. That's going to be your value area low and your 1.618 trend-based Fibonacci extinction target for the fifth wave of our move down from yesterday. So very local move down. But zooming in, let's go to the 1 hour time frame. If we're looking at this as a 1, 2, 3, 4, our fifth wave target is going to be right at that value area low, pretty much. The 1.618 is there. Not that one. We would have to go. Right there. So you can see that that's kind of the zone that we're looking at. That 61.3-ish zone. And then it goes a little, the box goes a little bit higher because we have a daily just above that. We have a daily level at 61.5-ish. So I would be looking for a new local low first, because if we come up to 64K, that is going to break some pretty key levels that it would break this, it would invalidate this impulse, I would say. And so far, this does look impulsive. Volume has been increasing on the move down from yesterday. So to me, it's a little bit more likely that we make a new local low first. Another reason I'm looking for a new local low first is because we rejected today from the VWAP. Each time we've come up to the VWAP today, we've rejected and we've seen a sell-off. So that means bears are in control throughout the intraday timeframes. Another thing we can look at is our order flow. So on our order flow, you can see here, for the most part, we have fresh long positions coming in. And I know that it's choppy in here, but we have overall our CVD is going up. And what is CVD, guys? It's market shorts or market longers. It's active market participants who really move the market on a day-to-day basis. And you can see that those are fresh long positions coming in. So we have a bunch of fresh long positions coming in, and they're not really able to break market structure bullishly right now, meaning that, you know, it's being absorbed somewhat. Now, we're not seeing technical bearish absorption yet on the charts. You know, you'd have to break above some of these highs to see. Actually, we are seeing a bit of bearish absorption from this high at pretty much $63,000. You can see we have lower highs on the price action. We have higher highs on the CVD, or we did have the bullish absorption, and it was on an increase in open interest. So we really had bullish absorption coming into these two highs this morning, or bearish CVD absorption coming into those two highs. And it makes sense because we see a bunch of longs coming in, but they're not able to push the price up, right? They're being absorbed by a bear, a big whale that is planning to use that as fuel to the downside. So for me, the intraday bias today has got to be a bit locally for a new low to be coming in. Now, if we do come up to 64K, that is still a valid resistance, right? Let's pull that golden pocket. Golden pocket's coming in, you know, and I guess your index chart, the value area low is a little bit, or the value area high is a little bit lower than Coinbase. Let me check the Bybit chart here. I would be interested to look at that Bybit. And then we could pull that volume profile. Yeah, and the Bybit value area high is even higher than Coinbase's. But on the index chart, you can see how that value area high is very close to your golden pocket. So I guess you could see maybe a move up to there. But remember, if we're looking at an impulse down from yesterday's high, 1, 2, 3, 4, 5, you do not, your fourth wave, you cannot hit the golden pocket of your third wave, right? So if we even come up to 63,323, you're going to invalidate this as an impulse. Then we would have to say it's more likely to be a finished three-wave corrective structure, and now you're going to see, you know, a bit of a move up. And we can also look at our fourth wave targets by taking out, or by taking that Fibonacci retracement from the highs of 3 to the lows of 3. We put on our wave 4 targets, and guys, where did we reject? Here, 382. I mean, it's very highly likely to me that we're in this today has been a fourth wave correction before making a new local low on the daily time frame. Because look at, you're rejecting right from that 382. 1, 2, 3, 4, and then now we need a new low. And the target of this fifth wave, the minimum target is to take out the lows, right? Another thing, at least on the Coinbase chart, those lows are $9. They're pretty much equal lows, right? A $9 difference in the lows, but they're pretty much equal lows there. That's twice the liquidity to come grab. Okay. Anyway, for me to get some funds to put them into AccuTrust coin, I got rug pulled 5 times on Pump Fund. Well, guys, just be careful putting money into new coins that you know nothing about. You know, a lot of people will hype up altcoins, these new altcoins that pretty much, and they talk about rugs and stuff like that. And that coin itself is probably the one that's going to be rugging. So, Stardust, Dust Neuron, just be careful, man. You know, that's all I would have to say. Yeah, that could make sense into the fifth wave. By the way, guys, on my YouTube channel comments, on my live streams and my comments, oftentimes afterwards, I'll see these like, oh, Exovium partnered with Apple, Exovium partnered with Walmart, Exovium partnered with Amazon. Oh, and Trump's endorsing Exovium. All these things like that, they're all scams. They're all scam coins. They want you to go buy a bunch of that coin, and then they're going to dump all of that, their pre-allocation on you. So when you see comments like that, where there's like 30 or 40 comments about the same coin, and it's a bunch of people ragging about these new partnerships, and it's going to go to this price in a week or 2 weeks, don't buy that. Like, please do not be that person in crypto that sees some random comment on YouTube and goes and puts their life savings into a coin. Like, do not be that naive. Please. Like, I'm not trying to tell you guys what to do. I'm just saying that I've seen it. We've all asked Mark. Mark has probably seen that scam 500 or more times. Actually, he's been doing this for years. He's probably seen it more than 5,000 times on every single video from every single YouTuber. What do I say about Bitcoin dominance? Okay, let's check Bitcoin dominance. Where are we at here? Well, okay, we took out some liquidity into a golden pocket at 59%. We were pretty much bouncing from value area low. But I would have to say Bitcoin dominance actually looks like it's going to break down still. If we look at from the rejection, and one thing that I don't know why TradingView does this. Okay, so we took some liquidity from an internal high, and then this definitely looks impulsive to the downside. Now, I know this Bitcoin dominance isn't actual price action from a coin, but it's based off psychology, right? Trading alone is based off human psychology, so it still makes sense for a dominance. So you still see liquidity grabs, and then this still looks impulsive to the downside. So to me, this looks like a 1, 2, all of this is a 3. We saw our 3-wave corrective move in a 4, and now we're in the 5th wave, right? But within the 5th wave, you see a 1, 2, 3, 4, 5, and the goal is to take out the 3rd wave lows. Overall, we're looking at a bigger 5-wave impulse to the downside. 1, 2, 3, 4, 5, right? To take out the lows. That means altcoins could pump against Bitcoin. And Bitcoin is starting to reject from an internal liquidity grab into an internal golden pocket. Also kind of creating, now, this is not generally the area you look for a head and shoulders, right? After a big dump, and I just described this to someone last week, so after a big dump is where you want to start looking for inverse head and shoulders, that bottoming reversal pattern. Here, we had the big dump, but you could see you kind of have that left shoulder, head, right shoulder formation where this could now break down from the volume profile with a high amount of volume taking out the local low. And it would be pretty much just like the highs. It would be like a topping reversal pattern of the 4th wave. We can also pull our Fibonacci retracement. Look at where you rejected. 0.5 Fibonacci, wave 4 target, right? So I would want to see this roll over relatively soon. If you're looking at seeing from those highs that we made on Sunday, June 14th, you would want to see this roll over pretty quickly, like a 1, 2, and then this you would want to break down in a third wave, or you could see a variation of a 1, 2, 1, 2, and then a breakdown in a third wave, and then you see your 4 5s coming in. But overall, it's highly likely to me that we do take out this low around, what is that, 57.69%. So meaning altcoins could see a reversal against Bitcoin, or just not be dumping as hard as Bitcoin. And then if we look at the larger range that we've been in, this range that we've been in really since August, we're just chopping within this volume profile. I mean, for about 3 years during the bull market on Bitcoin dominance, we were in this ascending channel. You can see from all the way of March of 2023 to really, July of 2025. So over 2 years, we were chopping up and in this ascending channel. We were ejected from the top. We bounced from the midline, came up, kind of grabbed that liquidity into one more high. But when we lost, you can see we tried to bounce from the bottom of the channel here. We lost it. We came up, we back tested the golden pocket and the breakdown of the channel, and we're kind of just chopping sideways ever since losing this 2.5 year long bullish structure. We're chopping sideways here. To me, it's likely that this is a bit of an impulsive move to the downside, right? Impulsive move to the downside, chop sideways for a bit in a corrective move, and then we could see another move to the downside. It would really be nice to come to the weekly channel midline, which is this guy here around 55%. That weekly channel midline would be really nice to come down to, or even to grab this liquidity from those November and December lows, which were highs on the altcoins, if you guys remember back then. I don't think Bitcoin's going to break down like super far Bitcoin dominance. I think it's just too dominant compared to the altcoins. There's so much crap altcoins out in the market now that, in my opinion, we're not going to see a huge breakdown in Bitcoin dominance down into like the 30s or 40s, but you could come down, 55 to 53% or so. And for now, you want to pay attention to this sideways range that we've been in. Man, if we start to lose this value area low again, it would be really nice, because that means we could see a big pump on some of the altcoins. Let's see, BTC. I had bought it at all-time high. Bitcoin dominance. Bitcoin dominance, I guess there are some exchanges where you can trade Bitcoin dominance, like futures trade it, but you can't really buy Bitcoin dominance. Next stop, 68K. So 68K is still a possibility. Remember, guys, we talked about that larger WXY correction. Let me get back to the lower time frames. In a wave 4, we talked about the possibility of shifting this wave 4 over, and we're now looking at pretty much just seeing this range extend, right? 3-wave corrective move in a W, 3-wave corrective move in an X, and then you could see another 3-wave corrective move in a Y. But one thing to talk about here, guys, if the X wave comes down and hits the 0.7 Fibonacci, then it means that it's a more likely probability that the Y wave doesn't take out the highs at 67.3. It could make a lower high and then dump. If we don't hit the 0.7 fib, then yes, your Y wave could see a move up to take out 67K, 67.3K. And actually, let's pull that 0.7 Fibonacci. So we'll go from the highs of W, the lows of W to the highs of W. We're going to throw on the 786, and then I'm just going to do 0.7 fib. 61,530. So guys, that is right around the start of our box, right? That daily's at 61,450. So if we come down and even hit this smaller green box where the value area low is and that daily level, as long as your 5th wave target for this little move today. Yeah. If we hit that or below it, that means your Y wave does not have to take out the highs of the range. Okay, BTC Diamond, a diamond pattern. Well, I would say this. We had a nice ascending channel here, and now we're in a nice descending channel. So if you take the highs, let's just turn off both of these channels real quick, and you take trend lines and just mark out that kind of trend that's occurring. Yeah, could you say that this is some sort of diamond pattern that's being created? I mean, I don't really see anything at the bottom yet to make it a diamond pattern. If that's what you're talking about, I'm not too sure. I wouldn't put much into that here. Trying to think of where you could be looking at that from. You'll have to give me some more information on that one. All right. Can we get back to 63K tonight? 63K? Yeah, we could. We could get back to 63K. The POC of the range is going to be right around 63K, I believe it was. 63.5. So we could absolutely bounce and backtest the POC before rotating down to value area low, right? Because now that we're back inside this volume profile, we're really looking for a rotation down to the value area low, but you don't have to go straight down. You could bounce from a local support, come back up, backtest this, and then rotate down. To me, it's less likely based off this structure being impulsive. Like I said, it's likely that we do make another new local low before bouncing. But after this impulse finishes, if this is a 1, 2, 3, 4, 5, after we finish this impulse, maybe we get that move up towards golden pocket and then a continuation down. Right now, our current golden pocket from yesterday's high to today's low is going to be, yeah, much higher. It's around the value area high. Your 786 is even close by that. Not too much. Golden pocket. But once again, guys, look at the trend-based Fibonacci extinction from high to low. I know I didn't get that right on there. To lower high. The 1-to-1 target is right below your liquidity. To me, that is a very, very strong signal. Also, we can look at our liquidity. Let me go to our Model 3 heat map. We have some liquidity today just below the lows, right? Just below our double bottom lows. Some strong local liquidity just below us. If we look at the past week of price action, liquidity right into that daily level, right? You can see coming into about 61.3, which is the value area low, 61.2, 61.3, right into this smaller box that I just laid out today. And this box was kind of just created based off the value area low of our range moving up just a little bit, because before the weekend, it was a little bit lower. But after this weekend, it's moved up a little bit. And we have that daily level that's in there. So we do have some local liquidity just below us. Let's zoom out a bit more. We'll go to the past month and look at this overall corrective range from 59K. So that's our 59K lows. Man, you know what? I mean, you can see clearly we have some liquidity clusters below us. Some liquidity below 59K. This liquidity, by the way, comes right into that 60K support, 60K-ish, taking out these internal lows. But I mean, I have to say this strong pool of liquidity that's resting above the 67.3K highs makes me also believe that this is going to be a prolonged complex correction with a W, X, and then potentially a Y. Now, your Y wave, if you hit that 0.7, once again, if you hit the 0.7, the Y wave does not have to take out the highs of X, but it still can. It doesn't have to, but it still can. So to see a larger kind of flat correction in here and then rotate down is still a possibility, meaning though we would expect another kind of couple weeks at least of a grind within this sideways range, kind of that max pain thing. When price goes to big old 618 at 57-ish, what will you be looking for to take the trade? So when we come down to 57.9 to around $56,000, I want to see daily time frame bull divs. You can see from this low at 59K, if we make another new low, even if it's going to be, hold on, if we're looking at the W, X, Y, and then a move down, between this major low and this major low, I want to see bull divs on the chart. And on NAMI, you're generally going to see multiple drives of bull div, right? You're going to see multiple drives of bull div in there. You want to see on NAMI, generally your money flow will be crossing back up into the green and will usually be in the green. And on Market Cipher, your money flow is going to be bottoming out and starting to rise. And that's that ultimate setup that I talk about, guys, where you see Market Cipher have one drive of bull divs with money flow bottoming out and starting to curve to the upside. And NAMI, because it's much quicker, the money flow usually is already crossed into the green or is just crossing into the green, and you have multiple drives of bull div. So I would want to see some daily time frame bull divs and potentially even those weekly bull divs, right? If we look on the weekly chart, we would be looking for bull divs on Market Cipher as well, because if we see this sideways and then down, you would see between the 59K low and the new low, you would potentially see those bull divs coming in on Market Cipher on the weekly. Now, by then, hopefully, our money flow would be bottomed out and starting to rise to the upside again. And then, once again, like I say on NAMI, you will generally see multiple drives of bull div. So 1, 2, 3 lows, 1, 2, 3, and then you'll probably see even another multiple drives of bull div, and your money flow is usually crossed into the green and is already starting to come up pretty aggressively. So that's kind of high time frame bull divs is what I would want to see to answer your question. Now, in order to even get better confirmations for sniper entries within this zone, I would go down to the 4-hour chart. And as we're coming into the 4-hour chart, after we see that WXY correction, let's just say this plays out. There's no guarantee that will play out at all, but let's say it does. And then we're impulsing down here. 1, 2, 3, 4, 5, something like that. In this impulse to the downside, I would want to see 4-hour bull divs between this low, and this low, or at least these two lows between the 3rd wave and the 5th wave low. I would want to see some bull divs coming in on the chart. On the 4-hour time frame, I'd want to see bull divs on NAMI I would want to see money flow bull divs on NAMI as well. And then you could even zoom into the 1-hour, look for 1-hour bull divs. And potentially a range to form, because remember, we're looking at this whole bottoming formation as potentially accumulation, right? So we're looking at in here, for the most part, I'm looking at this potentially being like a tap 1. You get that, move in the grindiness. You get a tap 2. Generally, your tap 2 is always deeper than your tap 1, whether that's to the upside or to the downside. But I'm looking for a tap 2, and then in a model 2 distribution, like say after that tap, we get a rise up to take out our highs at 67.2. We reject, and then you get a bit more of a range to form, right? But you come down really towards golden pocket 786, and this is your accumulation that takes 2 to 3 months to form, but that is that bottoming accumulation pattern that forms, and then you get the end of the bear market and you start to see expansion to the upside. I would really, really like to see accumulation in here. And to me, I would like to see a Model 2 accumulation, which is, in layman's terms, an inverse head and shoulder, right? Tap one, then you get your head, and you chop for a bit, right? You continue the range, you get that tap 3, which is your right shoulder. So like left shoulder, head, right shoulder. And then you get that move to the upside, that break to the upside. Now, in a Model 1 accumulation, you see something very similar, but you get that initial tap 1, you get a lower low and a tap 2, and then you get a kind of a lower high and then another lower low and a tap 3. And what you're doing is you're creating that selling exhaustion channel, right? It's that, you get the sharp move down followed by that selling exhaustion. And I point this out a lot on the channel. When we see those moves on the channel on low time frames, you'll get that sharp move down, and then you'll start to have that grindy overlap. And that grindy overlap is selling exhaustion that's coming in. You're starting to get bull divs between all of these lows with bull divs on the chart. And that is generally when you see that big break to the upside. So I want to look for some sort of accumulation over the next weeks to months in this zone. It is not guaranteed to play out. Like Machi HK is thinking, we could dump to 39K or 33K. I don't think that's the highest probability, but who knows, you guys? We could also be looking at some sort of larger time frame accumulation that's already started, where this is the tap 1. We're still overall in our tap 2 lows forming right now. After bouncing from 57K, we get a move all the way up to, maybe the mid 70s, high 70s. And then we get another move down where this is the accumulation that's been forming. And it would make sense because we have a reaccumulation right here from 2024, where the big guys all bought up Bitcoin. They reaccumulated Bitcoin in 2024. They were willing to buy Bitcoin after a pump, which is reaccumulation in 2024. So it would make sense that it's in that same price zone. The big players do like to defend their positions like that. Okay, let's see. I have kids all over Italy now. All right, Mark, you're having a good time then, man. Heck yeah, but 2027 Father's Day is going to be a busy one. Well, shoot, Mark. Good for you, my friend. Bywood 7789. We are forming a range in 4 hour. It retested the support 3 times. We have a break of structure. It probably is going to sweep 68K. On the 4 hour chart, I mean, yeah, if you're talking about this being your bullish break of structure, yes, we did break structure bullishly by taking out your 64K highs, but we've also now broken market structure more recently, bearishly, by taking out your 62.2K lows. But let's see, that's why we're looking now at a larger kind of corrective range in here. Flat corrective range, where yes, you could still make a higher low and then take out 67.3. And remember, those overall wave 4 targets from the highs of start of 3 to the end of 3, your wave 4 targets, you could still make it all the way up to 68.5. And often what we see in these larger complex corrections is you see that initial rejection from that 382, and then you see a pullback, and then you get that next move up to the 0.5, but overall you still rejected in your zone of the 4th wave, and then you get that move down to new lows. I really do think volume is one of the most important things to look at in the market as well. And if we're looking at that volume profile, Let's just think in terms of volume profile trading, not Elliott waves, not anything else, just in terms of volume profile trading. We have this sideways range that has been going on for about 3 weeks now, right? About 3 weeks now, 20 days or so. Yeah, about 20 days or so. And we're back inside the volume profile. You can see after seeing a failed auction breakout, we fell back inside, we back tested, and we were now losing the POC. So the highest probability is to rotate down to the value area low, or that zone of the value area low. After seeing that touch of the value area low, could you get a bounce and then try to break out of the volume profile again and take the highs? Yes, you could. It does. So here's the cool thing as traders, guys. We can have a bias and we can counter trend trade our bias no matter what. Like, there is a possibility that this could be, now this, for me, this is really hard to count as impulsive, but a 1, 2, 3, 4, 5, where we break straight down from there. But am I still going to be looking for longs in this zone if I have proper confirmation? Yes, I will be. Am I going to start looking for shorts? Let's say we do come down and we bounce from here and we come up in a Y wave just to come take out the liquidity from Monday. Will I be looking for shorts up here around that liquidity grab into our pitchfork band? We also had a weekly level and a naked weekly point of control that was front run. Weekly level that was front run. Naked weekly point of control that was front run at 65.7 pretty much. So could we come up in our Y wave to take out Monday's highs and then roll over? So I'll be looking for shorts here, even though it could break up to take out the overall range highs. As a trader, it doesn't really matter. What you're looking for is your confirmation, your confluences of support and resistance, and you're looking for confirmations to enter the trade there. Now, will you miss some trades trading that way? Yes. Will you lose some trades trading that way? Yes, you will. But overall, if you're using proper risk management, 1 to 3 risk to reward ratio, guys, I am telling you right now, if you do this properly, you can have a risk to reward ratio. As long as you're taking risk to reward ratios of 1 to 3, you could lose 70% of your trade and only win 30% and still be profitable. Now, a lot of the times in this Divine Hood community, we like to take even better risk to reward ratios than 1 to 3. So say you get stopped out a couple times trying to, long the bottom down here, you lose 2%. Maybe and then your third trade, you got it, you hit it, you come up, you make 9% on that trade. You're still going to be up 7% overall. So it's about your risk management. TXRX, welcome in, my man. 61.6 and 60.5, like this, maybe even lower. Yeah, that's exactly what I'm looking at, TXRX. Around 61, from 61.450, which is the daily level, to about 61.200 is one micro box of support. But the bigger level to me is taking out the liquidity into the naked daily point of control at 60.7 to 60.6. Now to the upside, we need to get above the VWAP before we can even talk about anything else, right? VWAP's been acting as our resistance for the day. I would have to say the way that this is chopping right now, hold on, I gotta make sure this, yeah, that is a lower high. If we're looking at this overall being some sort of flat in here, then we would have to say this is a 1, 2, 1, 2, because we now have overlap, and then you would want to see a breakdown in a 3, and then maybe you get your 4 5s coming in, something like that, or your all right, 1 2 1 2, you break down in a 3, maybe you bounce from the value area low, you get a small move up in a 4, you get a small move down to start to bounce from some support levels within this box, and then you get one more, and then you take the liquidity to overall end this last little leg down, and then you get your big move up. which could take some time, right? It could take a day or two to play out. Yeah, thank you, Stardust Neuron, for the comment, man. Funny community and nice stream, love it. Man, I'll tell you what, Stardust Neuron, Mark Dutch is the funniest mod out there in the world. I love it. Pump Fund, yeah, man, Pump Fund is probably, I haven't traded Pump Fund too much, but once again, I don't like to trade those lower liquidity altcoins. Guys, Hype, by the way, last Thursday on Hype, I talked about a move down on Hype based off the higher time frames. We are coming into a golden pocket right now, but I talked about the move down because we were starting to lose the value area low on Thursday, or the value area high, excuse me, on Thursday. I talked about a move down. Right now, we're hitting a 1-to-1 trend-based Fibonacci extinction. So if we look at this as an A, B, C, or some sort of corrective zigzag, because this does look a bit impulsive, right? This looks impulsive. You have your golden pocket right at the 1-to-1 where we're at right now. But even a little bit lower, I like better because we have some volume as support there. We have a naked daily point of control at 60.7. We have a fresh weekly level at 59.73. We have our 1.236, which is also a valid target for this three-wave zigzag move, right, to come down to the 1.236. We have our range point of control. We have another naked daily point of control and a naked weekly point of control. All within this zone, to me, is the real big zone to be looking for at least some sort of scalp long opportunity. And then the zone that we're at right now, literally right now, or an hour ago, 2 hours ago, at 61.8, was an opportunity for at least a scalp. But the overall premise, because this moved down, could we count a 1, 2, 3, 4, 5? I think we hit the golden pocket. I think if I remember right. Oh no, yeah, we did reject from your 0.5 for your fourth wave. So this is a funky looking impulse to the downside. 1, 2, and your 2 retraced very high, but it didn't take out the origins of 1. So that's the only invalidation is taking out the origins. 2 wave retracing that high is very uncommon, but it's not an invalidation. 3, 4, 5. So 5 wave impulse here. This we would have to look at as some sort of 3 wave corrective move with an extended C wave here. ABC with an extended C wave. And then we could be looking for another impulse, a 1, 2, 3, 4, 5. But overall, you're looking to take out the lows at 52, seeing a larger flat in here. Right? All of this to say you could be seeing a larger flat, taking out that liquidity into a golden pocket that was front run. This golden pocket at 52.46 was front run. You can see 52.58 did not hit 52.46. In the meantime, you will see small bounces from support levels with confluence. If we do get down here, an SFP this low, I would be personally looking for a potential swing long. And I will let you guys know in the Telegram if we do come down there, especially if we're seeing bull divs on the way down there, I will be looking for a swing long from around 52.5. Yeah. Let's see. I was looking at hype just before we started the stream. We are hitting into that 1-to-1 right now. For me though, look at how much overlap is in here. This is almost impossible to count as an impulse. This looks corrective. All the choppy overlap. You don't even have to try to do the count. You can see all the choppy overlap. Impulses will have some sort of gap within it. Also, a bunch of choppy overlap in here as well. So could we be looking at some sort of double zigzag in here? W, X, Y, where it's going to end at the 1-to-1. Because most of this is choppy overlap, I am looking at taking longs at higher lows. Now, we might continue down to that 52, but because of what we're seeing in here, I have to at least consider taking some longs at these nice confluences. And also, we know that Bitcoin dominance was about to break down. Let's see what Bitcoin dominance is doing. Yeah, and if Bitcoin dominance breaks down a little bit more and starts to lose our structure, our value area low, man, yeah, if we can start to break this down, we could see some pumps on some of the altcoins. Another coin that I was looking at was Solana. Solana is at the bottom of a channel. And on Solana, well, I would like to come down to around 66.9. You can see our golden pockets at 67.5. And then our liquidity is at 67.2. But if we look at our larger golden pocket, from the lows of the channel to our highs that we broke out of the channel, that golden pocket's actually even nicer to look at than this one. So let me get rid of this one for a second. Overall, I pulled the channel just like on Bitcoin from the low to the higher low up to that initial high. Okay. We ended up on Solana breaking out of the channel. Unlike Bitcoin, Bitcoin rejected from the top of it. But Solana broke out of it. We saw a bit of a failed auction up here. Fell back inside. And if we look at our volume profile, pulling our volume profile here, we're back inside of our range. Now, yes, you are at the bottom of the channel. Let's zoom in here onto the 2-hour time frame. Look at it's trying to hold on to the bottom of this channel, but it looks like it's forming some sort of triangle that could break down here. And if we look at taking a trend-based Fibonacci extinction, where's your 1-to-1, guys? I'm telling you, at 66.9, you see I have alerts set already. At 66.9, I am really looking for that potential long from there. Liquidity into your POC, into your 1-to-1. Golden pocket is just nearby. Let's see if we have that naked weekly there as well. I believe we have a naked weekly point of control there. You do have a naked weekly point of control there, right, as well. No naked dailies there, though. So this zone right in here is money for a potential long. I would say even a little bit higher. If you take that higher low golden pocket from the second pivot of the channel to the highs, your golden pocket's just above it, right? Just above it. And we front ran it on this low, right? Because it's pulled from this low to this high. So on this move down, you front run your golden pocket just barely. You make another big move up. So now we have liquidity from these lows, liquidity from this low, right into the zone. And so for me, that's why I had that golden pocket on the chart at first. I actually think that, let's just do this. This box here is going to be a really good potential target. If we break the channel down, if we break this channel down, we're probably going to see a quick flush down here. Now, if we SFP, it could just be as simple as a 3-wave corrective move to backtest before continuing down. But even along from here to here would be nice. at least a nice scalp trade, right? So I'm looking for a long from this liquidity grab, and actually we might as well set alerts on these guys as well. And there's a double bottom in there. Look at that double bottom in there, guys. So 67.86. If we get the SFP into like 67.5, I would really like to come down in SFP 66.92 though, into that naked weekly at 66.75-ish, 66.74-ish. But this zone in here is a very nice zone to be looking for at least a scalp long opportunity. Patrick Schooner, what's up, man? Welcome in. One question, long-term prognosis in like 2 to 3 years. Would you invest long-term in Bitcoin? Yes, I would. Actually, the next macro low we make on Bitcoin, I have limit orders to buy some at 57.9K. I have limit orders to buy. And one of the reasons why, not randomly out of nowhere, but you can see where our anchored VWAP from the bear market lows are, at least on Coinbase. Bear market lows, the anchored VWAP. If we're going to maintain the overall bullish trend on Bitcoin, once you start to hit that anchored VWAP, you can suspect that if Bitcoin is going to remain bullish overall, you come down, you hit that, you might see that big move up. Good example of that. Ethereum on the move up here. Hit it, moved up. Hit it, moved up. Anchored VWAPs, I'm telling you guys, anchored VWAPs are a trend, a volume-based trend support. Volume-based trend. So this trend was an uptrend. So you come down, you hit it as support. Volume-based uptrend support. We also had a golden pocket that we wicked to. And this was a small range that formed down here. We never took out the lows of that range. But those low range lows were important. And if you bring it to the range highs, golden pocket. Just something to think about. When you lose the anchored VWAP, you can see we lost it. Back test, reject, lost it. Back test, reject. You continue the downtrend. Now we have two anchored VWAPs. We have an anchored VWAP from our prior lows. This anchored VWAP is not that important. These two anchored VWAPs were the super important anchored VWAPs that I'm looking at. So you can see the anchored VWAP from the $1,400 low and the anchored VWAP from the all-time high coming up to around 2,800, 2,700. By the time we get up there, this is probably going to be down towards this box. But major, major resistance now on Ethereum around 27, 2,800. And on Ethereum, this area to me was a spot to start buying spot. I think I bought some spot at 1540 or 1560, I think it was, on Ethereum, because it's your 5-year long range point of control. If you look at that super large range point of control, right there, this entire upper price action going back to May of 2021. So 5 years long now. We're in June of 2026. You're at your point of control. Fair value of the last 5 years. If you're bullish on an asset, you're willing to buy it at fair value. Now, could it come a little bit lower to hit that value area low at 1456 or even take the liquidity out at 1385? Yes. But if you're buying in this zone and then it bottoms and starts to move up again, you're going to be very happy you were buying down here. Is it possible to hit 70K? Yeah, open NYS 0. I mean, it's possible. I don't know what your time frame is on that. Like, I think we're going to go much higher than 70K after we hit 57.9. After we hit 57.9, I think that we could go, you know, take out your highs at 83K. or at least if this impulse finishes, right, this 1, 2, 3, 4, 5 finishes, then you want to pull a golden pocket from the highs of the impulse to wherever the lows are going to be. I'm just going to put them at 57.9 for now. We can move up to 75K easy, 73 to 74K easy. And remember, we have this volume profile that we're looking at, this larger one. Yeah, I would even say coming up to that 786 Fibonacci. It actually would make sense as far as our pitchfork trading goes. You're going to come down, you're going to hit the bottom of the pitchfork. You're probably going to come up to this POC, which is going to be where your lower band is. You're probably going to see a small rejection, maybe a flip to support, and work your way up to the midline. Midline is going to be at value area high, 786. So I think you're going to see a decent move from here. And remember, in terms of that accumulation that we were just talking about earlier in the stream, tap 1 here, this all being a tap 2 in here, move up to 77, then maybe move down and hit the lower band again, and you get that tap 3. This is your accumulation that forms over the next few months. And then after that, hopefully you see an expansion out of this thing. And thank you, Open, for the Open NYS0 for the comment, man. I appreciate that. Okay, Cannon Gad, wouldn't that be a Head and Shoulders right shoulder higher? I'm not sure. Yeah, if you're talking about Cannon Gad, you're gonna have to give me some more information on which if Bitcoin, what time frame and stuff like that. But I can answer that question if you give me more information. By the way, biggest crypto public, Crypto Hedge is holding at 60K. If prices go sometime under 60K, it can force them to sell to cover dividend. Yeah, I think you mean that you're talking about MicroStrategy, maybe. Samuel S., welcome in, my friend. Can we go down to 49K? Yes, we absolutely could. Machi HK was talking about the larger WXY correction, or zigzag correction to the downside, right? Something like this being an impulse down, 1, 2, 3, 4, 5, extended 5th wave. You get your 3-wave move up, and then we're looking for another impulse down in here. You know, I mean, this would be a 1, 2, and then 3, 4, 5, but larger WXY. Now, one of the things he was looking at, and we're both looking at, is if this is a larger, instead of an impulse correction impulse, looking at it as a larger WXY. Here's your W. Here's your X, your 3-wave move in an X, and then you would need a 3-wave move in a Y. But your trend-based Fibonacci extinction for that WXY, if you go from the start of W to the end of W to the end of X, your Y wave could come all the way down to 39.5 to 33. Well, 33 is your most important support on the history of Bitcoin, in my opinion. Support, 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 resistance, resistance, resistance. Macro golden pocket pulled from the bear market low to the all-time high. Golden pockets coming in at 34.5 to 32.5. Right? You have to put it on log scale because this is more than a 100% move. If you don't put it on log scale, you can see that your non-log golden pocket is coming in also at 57K, 57 to 54. But that's not a proper 61%. Remember that 61%, that 618, 61.8% retracement, which is psychologically ingrained into the human consciousness. To get a proper 61% retracement, you need to take that and shift it based off log scale. It's going to give you your proper psychological 61.8%, which is what the human mind has ingrained into its subconscious and superconscious, I would say. But yeah, couldn't 49K be the bottom? You know, when we were dumping here, if we were going to continue dumping aggressively, like if we were going to see this little 3-wave corrective move and then continue down, I was looking at the potential of coming to your weekly channel midline and that SFP. Man, that would have been nice to see. Another, let's see, where was it? Here's your multi-cycle pitchfork. Now, this pitchfork has been super, super, super nicely respected. Let me just hide this for real quick. By the way, your anchored VWAP from the bear market lows on Binance are down at like 42K. Look at that. Way lower than Coinbase, way lower than every other exchange. And Binance is the largest volume traded coin. So could we come all the way down to 42K? Yes. But I'm looking for the bottom of this pitchfork to be potentially the bottom of the bear market. You can see how extremely nicely rejection from the lower band, rejection from the upper band. You break above it, you flip it to support, you come up to your midline, that's your 2024 all-time high. You correct down to test the band again. You break up, you see a distribution up here. Distribution above the midline, you break down below, you reject, you see a little bit of a failed auction rate here, and then you reject the midline for your all-time high. Since we've rejected that midline at the all-time high, we've been grinding down, and look at where we rejected at $82,500. It was the perfect backtest of your lower band of the channel, of the pitchfork band, sorry. Lower limit of the lower pitchfork band. We still have not touched the bottom of the pitchfork this entire cycle. We got dang close at 59K. We haven't touched it yet, and I'm really looking to come down to touch it. Naked monthly point of control, $57,900. Right there. Actually on Coinbase, yeah, 58 to like 57.8-ish, 57.9. So that is a naked monthly point of control. Very high volume support level. High time frame volume support. Just below us. I'm referring to Bitcoin Diamond. I made a stupid fork investment a long time ago. Okay, all right. Okay, never mind Stardust, Neuron. Thank you for that confirmation, clarification. ETH BTC forming nice bottom formation. Let's see here. ETH BTC. I believe I use Binance. Yeah. Well, we did see this aggressive move down on the 2-day time frame, followed by a zigzag 3-wave move up, rejecting from your lower high golden pocket. That means we have a higher likelihood of taking out that low into your larger golden pocket below, which is also going to be around the value area high of your prior range, your point of control of your prior range. Actually, yeah, I would say that point of control more so than the value area high. Look at where that's at. 0.02412-ish, right in there. I don't like how that is rejecting from the golden pocket. Let's zoom into that. Let's go to the 4-hour time frame. So you get a pretty aggressive move down here. Can we count? Man, actually, yeah, you're rejecting overall from this lower high golden pocket. I don't like how you're rejecting from that lower high golden pocket. But this here is also not nice for an impulse. You can see it looks like a 3-wave corrective move to start it, But overall, it also looks like a 3-wave corrective move. I don't see a 4-5 in here unless you're going to say that this is that little guy right there is the 4, and then you see a 5. So could we be looking at a larger complex correction, 3-wave move, 3-wave move, and then we get some sort of, let's see here, like this is a little bit choppy in a triangle here. Triangle, move up, and then a move down. I just don't like, so on the macro timeframes, I don't like how we front run this macro golden pocket. Just barely. And I would say from August, we've been in a very nice downtrend channel. We are seeing that bounce from the midline, but that bounce from the midline gave us what looks like a corrective move. So I would think maybe we're going to come down to the midline again. Money flow starting to leave on the daily time frame again. Even cross back into the red on NAMI. Let me look at the weekly. Man, I just look at that back test of the POC right here, and rejection was not good because it was holding as support. You lose it, and then you flip it into resistance. Here's the thing. Clearly, this move up looks impulsive. This does look more corrective, that ascending or descending channel with choppy overlap. But oftentimes when you're in these decent, after an impulse finishes, you often correct down to the golden pocket. I mean, that golden pocket is where your POC is at. This is your POC. Let's see if we have a naked monthly there. Oh, it's not going to go. No, we don't. And I don't think it's going to go back on the PVP indicator on the weekly. Let's try it. No, nothing really there. I mean, it doesn't go back far enough. If Ethereum comes down here, I'll set an alert on this actually. So this could be when Ethereum comes down to this golden pocket, if we have continued bull divs on the chart, man, Ethereum could explode out of this channel and see a big move against Bitcoin. So far from August, we're in bearish market structure. Lower lows, lower highs, lower lows, lower highs, lower lows, even here, lower highs. So I would suspect we are going to come down a little bit more to this golden pocket, but let's see. And then it would give us some nice bull divs locally too. So you can see here we have very slight bull divs on the daily time frame between these lows and these lows, 3-day time frame, I mean. But you can see we would form potentially another drive of local bull divs if we take out that low. Yeah, and one thing that we don't have is weekly bull divs between these two lows. No weekly bull divs. Overall, money flow does look nice, though. And no weekly bull divs on NAMI. Money flow is quicker and it's leaving. So I would say it is likely we're going to come down to this golden pocket. 0.24-ish. Low time frame, you can look at this range that we just broke down from. If we come up and see a bearish backtest, a value area low and reject, you would expect continuation down, and I would probably expect to take out these internal lows, and then you could look at a bigger range looking at this entire corrective move. Yeah, your golden pocket is going to be close. Where are you at? There we go. I mean, in the worst case scenario, you come down to the bottom of the channel, which would be around your value area low. Oh, never mind. That shifts quite a bit when you zoom out. Okay, let's see. Love it. I mean, I'll complicate things with indicators. Yeah, I mean, everyone has a different way to trade. You know, find a way to trade that works for you. If you can do it without using indicators and, you know, tools like Fibonacci's and stuff like that, guys, there is literally over probably 2,000 different trading strategies out there. So just find one that works for you and that you can be consistently profitable and use it. What, you know, like a lot of people get made fun of for pattern trading, but if you can be profitable being a pattern trader, do it like consistently, right? Using good risk management. If you're a smart money concepts trader and you are successful trading smart money concepts, do it. You know, do whatever works for you that will make you money consistently, and you make sure you're just using proper risk management with everything. Yes, you're right, Chris Ebo. As a trader, there is a lot of what ifs because you do not want to get into a mindset stuck one way, a perma bear or a perma bullish mindset. You look at all different scenarios and you set up yourself to trade all of them, right? You're even counter trend trading yourself a lot. So yeah, what if we go up? I'm going to short if we come up. If we hit and reject with certain confirmations. What if we go down? Well, I'm going to long if we hit our support level with confirmations. That way you're prepared for both scenarios and you can be a winner either way. So actually, as a trader, you do want to be looking at the what ifs. Now, I get if you're an investor, that's probably really frustrating for you. If you just want to come in here and know, oh, tell me what to do, that's going to be super frustrating. As a trader, you need to look at all the different scenarios and you can trade all of them, right? You can trade a bearish scenario having a bullish bias. You can trade a bullish scenario having a bearish bias. It's just about finding the levels of confluence where you're willing to, where there's high probability, like reversals, right? Like down in this area, we could have a high probability reversal if we come down here. Now, do I know it's going to work out? No. What if we go straight down? Well, then, you know, if you don't have proper confirmation, you don't take the trade. But those what ifs are what allows you to look at all these different trade setups, and those what ifs allows you to be prepared for to execute those trades at those certain levels, right? You're not trading it in the middle of nowhere. What if it does something here? I don't care. Like, you know, it's in the middle of nowhere. Okay, Kespo, it's good to see you, man. How you been? What level do you usually use? Wait, what leverage? Leverage, literally, Marius, leverage does not matter. Okay, so leverage is based off of your stop loss, your stop loss percentage. And I'll give you guys a good example of this, because if you're saying, oh, I'm going to use 100x leverage on this trade, I'm only going to use 10x leverage on this trade, whatever leverage you're using, it matters based off your stop loss. So let's say that we're gonna see something like this. We're gonna come down, we're gonna hit the value area low, and then we're gonna reclaim that daily. That daily is at 61,450-ish. Okay. And I'm looking for a long off the value area low. but I don't want to just try to knife catch the bottom. I want to wait for a bit of a reaction, and then I want to long as soon as we reclaim the daily. Okay, so I'm going to long it as soon as we reclaim the daily. My stop is going to go below the value area low, that bounce that we had, and I'm just going to be targeting the POC. Okay, now these are old daily levels that we just busted through. I'm going to delete these. Those were relevant until today, or until last night, really. And so this trade, okay, first of all, is it worth it? Is it a greater than 1 to 3 risk to reward ratio? Yes, it's a 7 to 1 risk to reward ratio. So check mark there. It's worth it to take the trade. Now, what's our stop loss percentage? Our stop loss percentage is 0.469. I'm just going to give a random, let's just say we have a $1,000 account, okay? So we're risking generally 1% per trade, 1 to 3% of our portfolio per trade. So if I have a $1,000 portfolio, 1% of $1,000 is $10. So that's what I'm risking per trade. That's not going to be my position size. That's if I get stopped out, I'm going to lose $10 if I get stopped out on this trade. So pretty much I'm risking 10 to make 70, right? But $10 is my position size. Now you're going to want to take that and you're going to divide it by your stop loss percentage number. But because this is a decimal, you got to move it over. So I'm going to do $10 divided by 0.00 because I moved the decimal over to 469. Okay. So I can risk $2,132 on this trade. And if I get stopped out, I'm only going to lose $10. Okay. But you're going to say, wait a second, Divine Hood, you just said you only have $1,000 in your account. How are you going to put $2,132 on the trade? Well, that's where leverage comes into play. Leverage is a tool to free up margin or to give you to borrow some capital so you can get your proper position sizes. It's not like, hey, if we come down here, I'm going to randomly 10x long my entire account or 3x long my entire account. No, it's based off of what you should be. So because I need at least $2,132, what I can do is I can crank up the leverage to 3x and I can go in and now I have $3,000 in my account, right? 2,000 of it is the exchanges that I'm borrowing. 1,000 of it is my own money. So now I can long this with the proper position size. And if I do get stopped out, I lose $10. You're still, whether your leverage is 1 or 3, you're still going to lose $10 as long as your position size is this number. Now I could even say, okay, you know what? I want to have money left in my account to take other trades. I don't want to have 2,100 out of 3,000 tied up in one trade because I'm going to trade some of the altcoins or I'm going to try to hedge short as well. I'm going to crank up the leverage to 10x. Now you have $10,000 in your account. $9,000 is the exchanges that you're borrowing and 1,000 is yours. I can take a 10x long on this same exact trade if I use this as my position size. So that means I would still put $2,132 on the trade. I would have about, what, $7,800, $7,900 left in my account to trade other trades with. But if I get stopped out, I'm still only going to lose $10. So it doesn't matter whether my leverage was 3 or my leverage is 10, or I could say I'm going to crank up the leverage to 100. You would have $99,000 you're borrowing from the exchange and $1,000 that's your own. As long as you're putting the proper position size on that trade, if you get stopped out, you'll only lose 1%. Leverage does not matter. Leverage is a tool to free up capital. It is a tool to use less margin in your trades. So I hope that makes sense to you. But Marius, it is risk management is probably the most important thing. So like if you're coming down here and you're going to say, you know what, I'm just going to 10x long 75% of my account. Well, that is gambling. That is not trading. That is not a proper way to trade. Yeah, now maybe if you win that trade, you're going to win a lot more than you would if you risk the proper amount. But you can win, if you're trading that way, you can literally win 20 times in a row. In your 21st trade, you lose. Now all of a sudden your account is down 75%. It might even be lower than your original starting amount. So trading is a game of numbers. It's a game of probabilities. It is not a gambling thing. And when you're just randomly setting your leverage on your trades, that is gambling. Generally, to answer your question, generally I'll keep my leverage at 10 or 11x. That gives me more than enough capital free for other trades, because I do like to trade altcoins and I do like to hedge short and hedge long at the same time. So if I keep my leverage at 10x, you just have to make sure you're calculating your position size. And the position size is what matters the most, right? And your position size is calculated based off of this number, your stop loss percentage. So I really hope that helps. GG360, good evening to you as well. Okay, do you think we dip below 60K or touch 60? I think we dip below 60K first before hitting 65K, in my personal opinion. And of course, I'm not a financial advisor. I don't give financial advice. All I am talking about is my own personal bias on things. But based off of Elliott waves, I would have to say we're probably going to come lower first. Yeah, Hype is retracing to the 618 right now. Hype is at the 1-to-1 trend-based Fibonacci extinction target and the 618. Why can't we drop to 60 or 57.9 on the next drop? Well, we could. The issue with that is this first move down from 67.3. It's very hard to count this as impulsive because of all the choppy overlap in here. So if we were going to drop down to 57.9K, you would have wanted to see this be a three-wave corrective structure that ended, and then you would want to start this move down with an impulse. This you would want to be an impulse. And then you would be looking for 1, 2, 3, 4, 5, something like that, right? But because it's very hard to count an impulse in here, now we have to look at a larger complex correction before the impulse down. We don't have a Discord, but we have a Telegram mixed crisis. To use the Telegram, it is a private community. It's free to get into, but it's private. All you have to do is you have to sign up with BYDFI using my affiliate link in the description. Once you've signed up, you have to deposit a minimum deposit of $100. Now that $100 you're depositing, or whatever, $100 or more, you can deposit more if you want. That is not money you're paying to me or you're paying to BYDFI. It's your money you're depositing on the exchange in hopes that you'll try out the exchange, like the exchange, and stick with the exchange. But once you've deposited the minimum amount, you can click the Telegram link in the description of this video. And in that Telegram verify channel, you're going to type in /verify and then your BYDFI user ID, and that'll get you into the Telegram. But, and thank you for the comment right afterwards, Mixed Crisis. I just do my best here. Okay, what would be a buy level for ZEC? Yeah, let's look at ZEC. ZEC USD. One thing that I don't like is that we saw that head and shoulders pattern up here. This is the proper area to look for a head and shoulders, right? Left shoulder, head, right shoulder, you get the big dump. Or in my terms, I would look at it as a model 2 accumulation, or distribution, excuse me. Tap 1, tap 2, tap 3, you see the expansion down on distribution. Now, we were also looking at this high right here being a macro high because it was our fifth wave target between the 1.236 and the 1.618. It was the fifth wave target. We hit the 1.236. We were looking at from this low at 300, which, by the way, I longed it at around 316, and I bring it up almost all the way. Look at this, very clear. 1, 2, 3, 4, 5. 5-wave move up to finish. Then we get this big dump down. Now, one of the things I was looking at was a couple weeks ago, if you remember during the live streams, we were looking at this being a really crappy 1, 2, 1, 2, but I didn't like that because your secondary 2 and your secondary 1 were bigger than your primary 1 and 2. We did end up getting a huge dump here, but so could we say 1, 2, 1, 2, 3? But if you retrace up to the golden pocket of yours from the start of wave 3 to the end of wave 3, if you hit the golden pocket in your wave 4, it invalidates it. So we have hit the golden pocket in our wave 4. So we cannot say that this is an incomplete impulse because we hit this golden pocket at $500. Now what we could be looking at is some sort of larger corrective move, right? And if you look at this move here, this looks like a very clear 3-wave corrective move in here. What I also don't like is you can see that the value area high of this upper distribution range, this was a distribution range right here. The value area low of that range is where we rejected. Value area low, you came up, you bearishly backtested that value area low, you rejected. So it is not good. Now we're forming a new lower range. I would say even, let's zoom in now. We're losing the weekly. We're at the bottom of the pitchfork. Let me get rid of this weekly because that's now old. So this box here I had laid out because if you pull this volume profile back a bit, you can see the value or the POC of this major upper range. The POC was down right near your 786, around 245 to like 235. But now it is shifted up, and we have to account for that. Now our POC is going to be in this zone. We could be looking at a larger 3-wave move, an ABC, right, for your W. You get your 3-wave move for an X, and now we're looking for a 3-wave move for a Y, where you still would expect, because we didn't hit the 0.7. Actually, let's double check to see if we hit the 0.7. No, we didn't. So you just hit your golden pocket there. So we could look for a move down, in other words, to take out this low around 250 in a Y wave. But you would be looking for impulse, correction, impulse. I'm not liking this pitchfork too much anymore. Let me go to a different chart. The Binance chart, yep. And by the way, Coinbase chart was messing up during this week. So we switched to the Binance chart and look at, we had the short right there. We had the short at the 1-to-1 trend-based Fibonacci extinction. It's also your larger range value area high. It was also your smaller distribution range value area low. That's why that box is where it's at, that purple box. We were looking for shorts up there. Now, I would say we're very, very close to taking out our internal liquidity at 401. Let me do this as well, and we're going to put that on log scale. I mean, your next major support level looks like it's going to be near the bottom of this major pitchfork band. 336, 328-ish. I would like to pull a volume profile. You can see this is our upper range. We had a big dump. We don't want to include the impulse in the dump, but as soon as that impulse ends, we start to form a new corrective range, so we can pull this range. Okay, we fell back inside the volume profile. We back tested the value area high. We have now come down and we're starting to lose the POC. That means you could see a move down to value area low. Value area low happens to be in that zone of support. This zone of support right here. Okay, now we can look for, let's zoom back out to the daily. Well, do we have any other? We have a daily level coming in at 362. Let's look for our weeklies. No, weekly's already been tapped. Okay, that's old. I want to look for naked weekly points of control. So we do have a fresh naked weekly at 377.7. We'll look for our naked dailies. And we have a naked daily right near our daily level. So we're starting to find some zones. This one is going to be important too. You can see that has not been hit yet. And you have liquidity right into it. Okay, so these would be scalp. These internal lows would be more scalp trades for me. But if you have a liquidity grab into a volume support, you always pay attention to that. Because what we might see here is, once again, that you kind of saw it up here, a distribution, right? Kind of that left shoulder, head, right shoulder, or tap 1, tap 2, tap 3. We could be seeing this the same thing. Left shoulder, head. You could come down here, grab liquidity, make a move up to golden pocket, and then see a big dump down, right? Left shoulder, head, right shoulder. But you could still long this and bring it up to golden pocket. So I will right now actually set an alert on 401 because we have an SFP long opportunity right at that naked daily point of control, at least for a scalp long. Yeah, and you have your 1-to-1 close by that as well. See, now this is where the what ifs come into play. I don't care what is it going to do, but what if we bounce from here? If we SFP that and then reclaim it, I'm going to long that, reclaim, stop is going to go below the low, and I'm at least going to be targeting my golden pocket. So I would pull a golden pocket from the high of the move to the low of the move, and I would be targeting the golden pocket, right? Well, you see we have liquidity at that potential golden pocket. That is an 8-to-1 scalp trade, almost a 9-to-1 risk to reward ratio, just for a lower high to be created before potentially creating another lower low. But that's still a good long position. So what if we SFP that? I'll look for long. If we don't, I wait till we get to our next zone. If we don't SFP that, we have another zone of a naked weekly down at the 1.236. I would look for a potential trade off of reaction from this level. If we don't see that, you have a trade down at this support level, naked daily and a daily. But the big level to me is this box right here. You have that pitchfork, you have the value area low, and you have the golden pocket. And that's where all these what ifs come into play. If we're coming down and we don't SFP, and then we see, you know, maybe a failed SFP and then continue, I would want to see bull divs between these two lows into this naked weekly and this 1.23 into this green box of support. You would want to see bull divs coming in on the chart. If you don't see them, you don't take the trade. And man, overall on ZEC, it's really a bummer that, and look at on Binance, your POC is still down here at 238. And if we look at pulling, let's get rid of that. Let me get rid of this now. If we pull that fib from the low of the range, right? This is a big range here to the highs we just created. We turn on our 786. We make that based off log scale because that's more than a 100% move. Man, that is the ultimate zone of support for me, would be to grab liquidity from the crash lows into the POC. This is a giant sideways range, right? So thinking in terms of the range, and look at this gap. The reason why we dumped down so aggressively was because there's a big gap in volume. You can also see where your high volume nodes are, right in this zone, high volume node, right where we just found all that confluence. Okay. Your other high volume gap ahead of there is right in this zone. You can see where volume is important in these levels. But ultimately, I do think we might even see a dump to take out these crash lows into 245 to like 238. That would be a swing long opportunity for me. Let's see, on the 1 hour time frame, at least on Market Cipher, as we're coming down to this SFP, you are seeing potential bull divs on the chart on NAMI, or excuse me, on Market Cipher, not on NAMI. I would want to see, now the way to trade an SFP, it doesn't matter if you have divs or not. It's better for confirmation, but with an SFP, if you pierce the level and then you get back above it, that is where you long once you start to get back above and you put your stop below that wick low. If you have bull divs on the chart, it makes it even better. 4 hour Market Cipher does not have bull divs and money flow looks aggressively leaving. NAMI, which is quicker to confirm, you are seeing bull divs on the chart and your money flow is bottoming out. Now, what's probably going to happen, because we're still not down there, is we might chop for a bit and then see another drive, right? You would have 1, 2, 3 drives of bull div, and by then your money flow hopefully is starting to cross into the green. I have an alert set there, and I will let you guys know in the Telegram if I take that trade, but I am interested in this trade around 401 to 394. 401 to like 394-ish. I want to look at the 8 hour because money flow is important to look at. Money flow leaving aggressively. You do have multiple drives of bull div forming, though. You can see lower lows here, higher lows here. You already have 1 drive confirmed. Now already we have a potential second drive confirmed here. So we're building very nicely multiple drives of bull div coming into this liquidity grab and naked daily point of control. And I was looking at a potential contracting diagonal 1, 2, 3, 4, 5, but your third wave cannot be the shortest, and it's going to look like that would be if we came all the way down there. All right, we're probably bouncing right now from a local 786. We'll put that off log scale. Nope. Okay. It looks like we're most likely going to take out that low at 401 because, yeah, you're finding some sort of support around the 886, but it's not, you're still starting to chop around it and break it to the downside. I would say we're highly likely to come down to take out that 401 liquidity. Another thing we can just look at is our more kind of sideways price action here. Yeah, I would say you're likely to come down a little bit lower. You're below the POC of this. We can also look at our downtrend channel. This is our downtrend we're in. The bottom of the channel is going to be right around that support. You're starting to lose your midline and you're chopping below the midline. So this is our channel here. Let's make sure we got that. Yeah, it would be really nice to reject from this midline and come down to the bottom. I have that alert set. I'll let you guys know in the Telegram if I do decide to take that. Let me get back to Bitcoin real quick here. What is Biddy doing? Yeah, just chopping, guys. We're just forming a little bit of chop. But until you reclaim the VWAP, I wouldn't even be concerned about going higher. You already see twice we've kind of shot up to it. And if we don't reclaim it, you are expecting to take out those local lows. You didn't even see bull divs because this high is higher than this high. By $9, only by $9, but it is higher. And we can look at our order flow, what's happening here. We're actually seeing some long positions close out in the past couple of hours. We had a bunch of people longing in this first part of this range that we've been in throughout the day. Look at fresh longs coming in. But now we're starting to see closing out of positions. And we know it's longs closing out because your CVD is going down. So they're probably saying, okay, whoa, it's not bouncing. Time to get our risk management in place. You know, let's protect position. Let's close out. Let's take some risk off the table. Shoot, if you wanted to do super low time frame trading, you could just play that range. Didn't hit the 786. Okay. Anyways, guys, thank you all so much for being here. I do got to get going here. Solana I did earlier, Damien, in the stream. So if you do want to scroll back, you can look at the stream. Thank you, guys. Marius, thank you for all the attention and patience. Of course, Marius, and thank you for the kind comment, man. Thank you all so much for being here. I appreciate it all. And guys, I really do want you to, to challenge, if I have something you're saying that you disagree with, you know, of course, it'd be nice if you're respectful about it, but I love the challenge. I love all you guys to throw out your different ideas. If there are disagreements and stuff like that, or if you think something different, I think that's what makes a community good, is when we all kind of, you know, have real conversation about the possibilities of what could happen and stuff like that. So appreciate all of you guys. I will be streaming again Thursday at 3 p.m. Eastern Standard Time and Friday at 3 p.m. Eastern Standard Time. Tomorrow I'll put out a video around market close. And remember, if you want to get updated in the meantime, you just got to join the Telegram. I try to keep you guys updated throughout the day, all day, every day in the Telegram. In order to join that Telegram, you have to sign up with BYDFI using my affiliate link and deposit a minimum deposit of $100. Once you've done that, you click the Telegram link in the description of the video and you type in /verify and your user ID on BYDFI, and that'll get you into the Telegram. So thank you guys. Please hit the like button on your way out if you enjoyed the stream or if you got any sort of insight. And I will see you guys tomorrow.